Let's talk about how to get you approved for an auto loan, even if you have bad credit or no credit at all. Let's hop right in. Hey party people, welcome back to my channel. It's me, Jazzy Mac, and I am so excited to be back in front of you. I'm sure all of you are like super hyped up on the free Starbucks that I sent you earlier today. And if you didn't get the free Starbucks, it's probably because you slept in or because you're not on my email list. So you miss out on all of the goodies. So of course, if you want to get on my email list, all you have to do is sign up for my waitlist, or you can get my templates. So let's talk about how you get approved for a car, even if you have bad credit or no credit. Now, there are going to be 3 different programs that I'm going to discuss today based on where you stand as far as your credit is concerned. So the first one that we're going to get into is going to be the first time buyer program. And this is going to be geared towards those that have no credit at all. No credit means that you literally don't have a credit score. It means that you've never purchased anything on credit. This is totally different from bad credit. So when we say no credit, it means that when you go to pull your credit profile, no score comes up. This is usually the case for someone that has never had credit, such as someone that's fresh out of high school or fresh out of college, or just somebody that chose to never use credit, like perhaps a Dave Ramsey stepchild or something. So with a first-time home buyers program, this is going to be offered generally by a nationwide car dealership that's kind of like a chain dealership. So if you've ever heard of like Ford, Lincoln, Mercury, like Stivers Ford, stuff like that, those companies that are like national, those are going to be the bigger car lots that would offer you something like a first-time buyers program. So generally, to qualify as a first-time buyer, you're going to obviously have never purchased a car before. But when it comes to income, they want to make sure that you have at least $2,000 to $3,000 in monthly income, and they would expect you to put down a down payment of sometimes $2,000 to $3,000. Some programs have it to where you don't have to put anything down. And what's also good about these programs is they're generally for newer cars. So they're not going to offer that program for some type of car that's like a total lemon. It's going to usually be a fairly new car, maybe a year old, maybe 2 years old. And usually there's going to be a very low interest rate. A lot of them offer college students discounts where you can get a 0% interest rate for a certain number of years. So that's really something great to utilize if it's your first time buying a car and you just want to establish some credit and you know that you're going to make your payments on time. So that is an option for you. Now, I do want to caution you, when you go to these different dealerships, make sure that you're not going to some buy here, pay here dealership. Those dealerships are just infamous for charging an astronomical interest rate. When I first got my car, I had a 21% interest rate, obviously because I had very bad credit. However, I didn't realize that if I had gone to a reputable dealership and signed up for that first-time buyer program, I probably could have gotten my interest rate for 2 to 3% or possibly 0%. So never ever do buy here, pay here. I know sometimes like we can get desperate, but it's just not good. Like it's not a good financial decision. So the next program that you can definitely look into, this is going to be for someone that has bad credit, meaning you have anything less than a 680. So the special finance dealership or the special finance manager is basically going to be an alternate program that is offered to people that don't want their approval to be based on credit. So with the special finance program, you're basically being rated based on your income, your employment history, your residential history, and maybe some other factors and references that you might have to provide. So this is also a really good alternative if you don't want to have your credit pulled and shotgunned. And we've talked about in other videos what shotgunning is. That's basically where they shop around your credit to like 30 different lenders. And usually that hurts you in the long run because nobody wants to give credit to somebody that looks desperate. Like they've got 30 inquiries and now they look desperate. Nobody wants to give like credit to a person like that. So that's why shotgunning your application, one, usually you don't sign off on that. And that's a reason for you to get that stuff removed. And I do have templates for removing inquiries, but it's also something that just doesn't make you look like a responsible person when you have 30 different inquiries just sitting there. It makes it look like you're just shopping around for the best deal and you're desperate and you're trying over and over and that you're not actually taking time or doing your due diligence to responsibly build credit and maintain good credit. So in addition to that, there is, of course, a third option that you can utilize. And this is for people that have bad credit or no credit. So whatever your situation is, even if you have a little bit over 680, you may still want to utilize this option. And that is going to be your local credit unions. Why would I recommend a credit union over like, say, Wells Fargo? Well, basically, when you work with a credit union, they're a little bit more lenient towards their customers because credit unions are smaller. So it's more so about building a really good relationship. Now, if you use a chain bank, a Wells Fargo, a Chase, you might be able to get a loan there, but generally those loans are going to be reserved for people that have excellent credit that also have a really high income. So sometimes it's not really worth it to apply through those bigger banks. It's sometimes way more beneficial to go through a credit union that isn't going to pull your credit a bunch of times because obviously they're the ones giving you your credit. So in addition to that, for credit unions, you sometimes will get coverage like through the credit union, as far as like perhaps you wanted to have like an extended warranty or, maybe there's gap coverage that you could get a discount on for going through the credit union. There's little perks like that kind of make it worth it. And so, it's something that I would recommend going that route first. I obviously recommend that you build a relationship with the credit union. If you can take 3 to 6 months to build out that relationship, that would make your chances of getting approved for a loan a lot stronger. You can also ask the people at the credit union, like, what is their general criteria for approving people? Like, we know that you approve people with less than perfect credit, but do I need to show my work history or do I need to show that I have 5 references? Every credit union is going to be different. I've heard that Navy Federal Credit Union is supposed to be a really good credit union to use. My brother has used them for years. And he kind of raves about them. I've never personally used them, but family members have because I come from a military family. Go Navy, go Army, go Air Force, all 3 branches, and they all really, really love Navy Federal. So those are some options for you. And of course, anytime you get ready to, purchase a vehicle, you want to make sure that you put as much money down as possible, because obviously this is going to save you money on the back end. As the life of the loan goes on, you don't want to spend thousands of dollars in interest simply because you wanted to have a super tiny down payment. Even if they say a down payment isn't required, it's still very beneficial to put down a down payment. And now the other thing is you want to make sure that your payment history is impeccable. Your payment history should not be make 6 good payments and then skip a few, because that is going to kill your credit score. One missed payment can lower your score by 100 points. So make sure you have perfect payment history when you go through any of these programs. So I hope you found that helpful, and I just look forward to seeing you in the next video. Bye.